Welcome to Chit Chat Money. This is our Thursday deep dive episode where we interview an analyst to discuss either a single stock or an industry overall. And today we have on the show Sleepwell Capital. He's been on the show before. He's a longtime friend, and he's kind of maybe I would say our foremost expert on audio and music industry in general. And today we hit specifically all things music. We did not talk podcasting. I think we're maybe saving that for another discussion. But this is just really all things music, including streaming rights, relationships between the labels and the streaming organizations, the potential for AI. We kind of touched on that at the end. And really just where we think the industry as a whole, the music industry, can go from here. However, before we get into it, I do want to mention Sleepwell asked us to throw an extra disclosure on this. Just know that the opinions expressed by Sleepwell are not investment advice. The author and associates, or Sleepwell and associates, actively invest in securities. They may have long or short positions in any companies or industries discussed, which are subject to change at any time without notice. There's our disclosure. Keep that in mind. Without further ado, here's our interview with Sleepwell Capital.
Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schafer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are also general partners at Arch Capital, and Arch Capital may have positions in the securities discussed in this podcast. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guests is not formal advice or recommendation. Now please enjoy this episode.
All right, welcome in. Today we are joined by longtime friend of the show, multi-time guest. I'm not sure how many times at this point, but I know you've been on a couple. So Third time? Okay, it's Sleepwell Capital. If you're on Twitter, you may know him as kind of audio music expert. We've also had him on to discuss other companies as well. So feel free to look at those in the catalog. But we're talking music today, so pretty much all things music. I know some people are going to want us to ask about AI, but we're saving that till the end. I think the best place to start is to kind of lay the foundation, because everyone has their own experiences with music, but maybe they don't know how the actual industry works. So could you go through the current state of the market, where we were at prior to streaming, and then we'll kind of talk probably more about the streaming royalties in a second.
Yeah, sure. No, and thanks again for having me. I think it had been over a year by now, but yeah, excited to be back. So, yeah, I think it's pretty helpful to set the context and actually go back maybe to the 90s to kind of know where we were coming from. I think music is a particularly interesting industry to study and understand, because it went from a pretty good but unpredictable business to then being almost demolished by the internet and piracy, to now basically thriving again with growing and recurring revenue, right? So I don't think there's that many industries that in 30 years went through like 3 different phases. So just anyone who's like interested in business and business history, I think is very much worth understanding what happened, right? So in the 90s, I mean, obviously everyone that grew up during the 90s knows this very well, but CDs were the main form of consumption, right? They represented 90+% of the industry revenues. Back then, the labels were, very, very powerful companies. They basically controlled music production. They owned the studios, the equipment. So if you wanted to record something, you had to work with them. They controlled the manufacturing of the CDs and the distribution. They had the relationship with the retailers. So back then, the independent market, as we know today, was basically non-existent. But they also became arguably pretty complacent, right? They were used to this model of sort of a one-off purchase, And in some ways, this model was dependent on the artist coming up with basically two songs known as singles that were pretty catchy and could be sold commercially, and bundling that with another 8 songs to complete a record. But most consumers were paying for a CD because of those 2 songs that they had heard on the radio or on MTV or whatever. So the consumer experience wasn't ideal, right? You had to spend a decent amount of money to get access to all the music, right? So the internet came along in the late 90s, with quickly getting wide adoption, and very soon we saw piracy coming through and basically destroying the industry, because you had the option to buy a CD, or you had the option to buy to go listen to thousands of songs online, basically for free, right? Just by downloading them. So the labels were pretty much caught flat-footed through that time, and they took very long to react. Eventually, in the mid 2000s, iTunes came by and signed a deal to start selling songs, on their stripped down version. So you could pay 99 cents for a song. That really didn't move the needle. There was a bit of a revenue stream during that time, but the industry revenues coming down, and kept coming down throughout that time. And it wasn't until, the late 2000s, early 2010, when Spotify launched in Sweden, which interestingly, Sweden was like very well known for piracy. So it was they had much more piracy than many other countries, in large part because internet connection was incredibly fast. So in the way that happened was that Spotify had to come up with a model that could compete with piracy, right? So it was incredibly hard, but that also meant that the offering that they brought to the market had to be incredibly compelling. So originally it was a free version, ad supported, but it became a lot more convenient for consumers to just listen through everything through one application. And eventually they found out people were actually willing to pay for this, and remove the ads and have, even more convenience and no limitations, right? So fast forward, 15 years later, it's basically a thriving industry. It's grown a lot over the last couple of years. In 2021, it finally surpassed the peak that we saw in 1999. That's on a nominal level though, and inflation adjusted, we're still way below that 99 peak. But yeah, I mean, if just to put a little more context on where we are now, the 2022 was 9% growth in the industry, again driven by subscription. The recorded music industry is $26 billion. 2/3 of that is coming from streaming, and we basically have around 600 million music subscribers today globally, which is approximately 10% penetration. And obviously, developed markets are sort of getting closer to a more mature stage, but still growing, just more slowly. And then emerging markets are growing very fast because it's much earlier in the adoption curve, right?
All right. Yeah, that totally makes sense. And as you mentioned, streaming is 2/3 of the industry and will probably hit maybe 80% of industry revenues within the next few years. So I think it's important for anyone interested in this market, how streaming royalties work. You wrote a nice little blog post, I believe 2 years ago, outlining the complications with this, but where does the money flow? Because you have the platforms, you have the artists, you have some of the rights holders, and then you also have the labels as well, as I guess might be a little bit different in the mix there. So how does that work? Maybe from an example, or you probably have a better way to outline it than us.
Let's summarize it, and then anyone interested in kind of taking a deeper look, we can share that piece on Substack. So streaming royalties 101. if we look at the music industry, we're usually talking about two separate industries. One is recorded music, the other one is publishing. The reason why these two are separated is because every song has two separate copyrights. Okay, so on the one hand, you have the composition, which is basically the lyrics and the melody. You can think of it as as the music sheet with the notes and whatnot. Essentially, that's comparable to like a script if you think about filmmaking. So that is related to the publishing industry. On the other hand, you have the master recording, which is the actual file that comes out of the recording studio, right? The MP3 that goes and gets distributed to Spotify, Apple, Amazon, the radios, etc. That's what's referred to as the recorded music industry. Okay, so those are the two separate pieces of IP that every specific song has attached to it. Okay, now in terms of because there's a couple differences there, right? Recorded music is around 4 times bigger than the publishing industry. This it's a little complex, but it has to do with sort of the incentives behind it and the risks involved in actually recording and these songs, because it's more capital intensive versus just writing a song and sort of distributing it. So when you think about, for example, many people have read the headlines, which have been ongoing for a long time about Taylor Swift, right? So the master is in most cases owned by the label. Okay, so what that means is the label will, when they sign an artist, they'll pay the artist in advance that is usually recoupable with the actual royalties that the master will generate. And it's basically an 80-20 deal where the label keeps 80% of the revenues and pays 20% to the artist, right? So in Taylor Swift's case, she didn't own her masters, and the masters were actually sold and changed hands a couple of times, and she was obviously incredibly mad about that. So interestingly enough, she decided to re-record all of the albums where she didn't own the master. Now that's not normal, right? Like not many artists can actually afford to do that. But in most cases, when we're talking about the label negotiating a deal with with Spotify or with TikTok or something like that, we're talking about the master. Okay, it's that part of the industry is most of the time private negotiations, right? And the publishing side is usually government regulated. So there are certain laws. There's in the U.S. it's typically set by the Copyright Royalty Board, but the government will basically say how much it costs to license the publishing side of a song. So that, again, that's the composition. So if I want to record a song from Bob Dylan, where Bob Dylan is a songwriter, I can go ahead and do that and put it in YouTube or whatever. And then Bob Dylan's catalog will get paid for that, right? And that's set by the government, right? And I think the other distinction to make here that may not be as obvious is that in many cases the master and the publishing are two different people, right? There's especially these days with hip hop, R&B, even reggaeton, the performer is usually the one who's attached to the artist, right? So someone like Bad Bunny, he will get the cut from the master, but in most cases he would have worked with maybe 3, 4, 5 other songwriters on the song that will get a cut from the publishing side, if that makes sense. So maybe to now take that and put an example of how the money would flow. Because again, I think there's a lot of misconceptions here. We've all heard people complaining, artists, consumers, everyone that streaming doesn't pay enough, right? But there's a lot of nuance to that, right? So for simple, just to keep it simple, if you're paying $10 per month to Spotify, basically 67 cents, about 2/3, is going to get paid out to the rights holders, right? So that's rights holders is anyone that has some sort of IP ownership on that catalog, right? Within those 67 cents, approximately 52. So 67 cents, 52 of those are going to the master. And then the other 15 is basically going to the publisher. So again, you can see how those two are separated, and why that, why I was explaining that they're two different they're two different industries. In terms of how it gets decided who gets what, it's basically a pooling mechanism, and it gets aggregated, right? So they take all the money that they received from the month of April, and if Harry Styles had 10% of all the streams and they have $1,000 to distribute, then Harry Styles catalog will get $100 paid out, and then it'll get the label will take a share and pay some to Harry Styles, and the publisher will do the same things. There's usually a lot more intermediaries in between, but that's kind of broad strokes how the money is flowing. So, if you're an artist that signed a deal and gets 20% of the royalties of the master, and you're not writing your own songs, and you're not that big of an artist, then people may be paying $10 to Spotify, but you're not going to end up getting that much from that, if that makes sense.
Is this a way to think of it, that there's the song and then there's the content? Like, is that kind of a way to kind of look at the two different rights, I guess?
Are you saying content in terms of
like lyrics? So I guess.
Yeah. No, yeah. I mean, that's fair. I don't think the right way to refer to it is as the content, but I mean, the technical term is the composition, right? If that makes sense.
Okay. And so on, for example, to kind of put this in perspective of maybe the common music listener, one really popular song that came out recently was Luke Combs had an album, and one of the popular songs was a cover. It was called Fast Car. Fast Car was written by someone, Tracy Chapman, I want to say 30 years ago. Even though Luke Combs probably is selling that song, maybe is listened to more on his composition or on his audio recording, a big chunk of that is getting paid out to Tracy Chapman or whoever owns the actual lyrics, the actual composition side.
That's exactly right. The master will be paid out to, I actually just looked it up. He's with Sony. So Sony will take the master and will pay to him whatever terms they agreed when he was signed to Sony. And then the publisher will take the share that share from that song and distribute that to whoever owns that.
And that's that 15%. So the 15% goes to that person or whoever that rights holder is of the lyrics, whatever you want to call it.
If you're thinking about it, the total monthly payment, it's approximately 15%. But then in that case, that could get split up again. Publishers usually do a 50-50 deal. So the publisher will keep 15 and it'll pay, around 7% of that, 7% of the total, right? So it ends up just cutting that in half. right, to the estate of Tracy Chapman. I don't even know if she's still alive or not, but you get you get what I'm saying.
100%. Yeah.
But yeah, that's exactly how it works. And sometimes, like, and we can talk about catalogs in a little bit, but sometimes these catalogs get sold, and many in most cases, when you read the headline that Bob Dylan or Justin Bieber or whatever sold their catalog, in most cases it's referring to the publishing catalog. So they'll sell the writers share of the publishing, if that makes sense.
Yeah, definitely makes sense. All right, we're going to get to industry dynamics, but maybe, do you have any lessons as an independent artist of how these platforms work or how the modern music industry works? I mean, what's good about it? What do you think, it helps with the industry participants, mainly the artists, and what do you think could be improved, if anything?
Yeah, for sure. So I think it's probably helpful to give a bit of background of where I'm at now. So I'm an independent artist. It's a solo project. It's relatively new. I recorded it about a little less than 2 years ago, and it's still in process to, like, I have 4 singles that are out, and then an album is going to be coming out later this year. I think the first lesson that I learned pretty quickly, it's that it's a lot more work than I originally imagined. A lot of people, I think, when you think of this, like, oh, independent artists, like, you can, sit in a room, write songs, record, and pub, like that's not how it works at all, right? Like, especially if you want, like decent quality song, and try to do the best you can for it to get heard, right? So, recording it takes time. I mean, you don't necessarily have to go to a studio, but if you do have a studio at home, that still costs money. You need a producer, you need session musicians. I mean, I don't play drums, right? And I don't play bass. So I needed to find people that could do that for me. You need someone to on the kind of the more technical sound recording aspect. You need sometimes a mixing engineer. You need someone to mix the file, to master the file. And then after everything is sort of recorded and completed, comes the second stage, which arguably it's a lot more work and a lot less fun, because, I think that's another interesting lesson, that artists are not like business people, and they're not entrepreneurs. They just want to be in the studio writing songs, right? So this second part is where most of the labels tend to add most of the value, right? Because you need a manager, you need the distribution, you need advertising, marketing. You're going to do a promotional video. You're going to do, you need artwork. You need a bunch of photo shoots. You need interviews with the radio and blogs and what. So it's a ton of work, right? And that's like to just have some sort of decent chance to get heard, right? Because the other thing is, and this is not a surprise to anyone, I think, is that it's incredibly competitive, right? I think the most recent stat we heard is that there's 100,000 songs being uploaded to Spotify per day right now, and that sounds a lot like the podcast market too. flood of supply. Yeah, could be. But yeah, and that's up from like 60,000 a year or two ago. So it's rising. It's rising incredibly fast now. In terms of when the song comes out and stuff, I mean, there's only so much you can do marketing wise, especially if you're not getting support from the DSPs, so digital service providers. That's how they're called, the music streaming companies, right? So because the best way to get heard these days are you either get into a playlist on Spotify or one of the big streaming platforms, Apple, YouTube, Amazon, etc., or you go viral on TikTok. Like, that's basically the two avenues you have. The radio doesn't make much of a difference now. I've been featured on radio stations in Latin America. My songs are in Spanish, so it hasn't really moved the needle much, right? It used to be the radio 30 years ago, but that's not the case anymore. And I think the other thing is for most artists, there's only going to be like 2 or 3 platforms that really matter. right? So those 2 to 3 platforms are probably going to make up 70-80% of your streams. So you're probably going to be spending a lot more of your time and focus working on those platforms, if that makes sense.
And those are Spotify, Apple, YouTube.
Well, it changes.
Would that be the big three,
depends.
or it depends what market?
It changes a lot.
Okay.
Like Latin America is super skewed to Spotify. So I think for me specifically, Spotify is probably like 70% or something like that. There was a point in time where I was featured in a playlist in Amazon, so Amazon was a bigger part. That's not the case anymore. But now it's basically, for me, it's basically Spotify, YouTube, and actually Pandora has been pretty decent for me in terms of streams. And YouTube, I had a video which helped as well. And the marketing in YouTube is actually more efficient because you can actually market the video and like pay advertise a video, if that makes sense. So that's another way to try to get found and try to get heard.
So in your case, do you own the master recording then?
Yeah, so that's a great point. I'm not signed to a label. So what I did is and this is what all independent artists do, is you pick what is called a distributor. So the distributor will typically take anywhere from 10 to 30% of a cut. So it's flipped basically. Instead of that 80-20 that is typical in the labels, this is the opposite, right? And I mean, people that follow the industry may have heard of some of these companies, but the most well-known ones are Believe, 1RPM, City Baby, DistroKid. Believe is actually public, so you can look at their financials, and they're actually growing a ton. So yeah, I'm working with a distributor, and they basically, you never think about this, but there's like 100, 200 different platforms where music gets distributed to, right? So it would be impossible for me to go out and like upload individually to all of that. And that's basically what a distributor does. Plus, they try to help you with, marketing, and they have a relationship with all the DSPs. They talk to someone at Spotify, someone at YouTube, and try to push for your song, your new releases to get included in playlists, etc. So that's kind of what their role is. But I get most of the revenue. If that makes sense.
Makes sense. Let's move. I think we set the landscape for the industry quite well. Let's move to more, I guess, investing takeaways, I guess you could say. You mentioned that streaming is kind of the lion's share of music revenue today. Where are we at in terms of like market saturation with streaming? So maybe for starters, in North America and Europe, I know those are probably some of the more mature markets. Do you think there's still room to grow for streaming in those areas?
Yeah, no, I do. And I mean, it's slowed, and that's, I mean, it's not surprising. I mean, there's a natural S curve to all these markets as the adoption takes place. But if we look, so the entire market, right? It's around 10% penetrated. We can break that up into developed markets and emerging markets. The more mature markets, which are mostly the developed, as you said, are about 30% penetrated, right? One thing that is pretty instructive in terms of how markets like the US and newer developed markets, if we wanna call it that haven't been around as long, you can look at Scandinavia, because that's where Spotify started in 2008. So, I mean, we're talking 15 years now. And they also expanded to Denmark, Norway, Finland pretty early on. So those four countries are actually a pretty good data set to get an idea of how things can play out for the rest of Europe and the US. And they're basically approaching, if not already surpassed, 60% streaming adoption. And this is paid streaming. Okay. We're talking paid streaming. They're still growing mid-single digits. By that point, you're basically capturing the older cohorts that take a lot longer to to stop listening to radio or buying CDs, and they eventually decide to get a subscription. When they reached 40%, which is where the US is basically now, it was still growing 10% per year. I think for Spotify specifically, US is growing like 12%, or most recently grew around 12%. Now there's a lot of other developed markets that are 20-30% adoption. Actually, Japan is even lower than that. Japan is huge on physical sales. They still buy a ton of CDs and vinyl and whatnot. So just to, that's one way to think about it in terms of how it could play out. So yeah, I think there's still some runway left on most of these markets. Another interesting parallel is, we look at streaming video on the US. Its penetration is around 80%. I mean, I don't see any reason why it couldn't get there, in the next, call it 10 years, right?
Yeah,
I think people do want to listen to music, and the experience of getting an ad every couple of minutes just absolutely sucks, right? So it's just a matter of time, right? So yeah, that's where we are basically in developed markets.
Gotcha. And we had this one later, but I think it came to my mind, so I think it came to a lot of listeners' mind as well. When we're talking about these mature markets, people always bring up pricing power. They've been
Absolutely.
Apple just recently went up from $10 to $11, which is still significantly trailing inflation. Spotify's standard service has been $10, I think, ever since launching in the United States.
Day one, yeah.
And again, on an inflation adjusted basis, it is way down. This is turning into a bit of a leading question, because I do think they have pricing power, but I would like to see your opinion on maybe how much pricing power these services have, or whether, because I think the bear case for these streaming services is that they're owned by a lot of big tech companies and they don't really care about profits, and it's just a race to a bottom to reduce churn across their entire ecosystem.
Oh, look, I mean, go ahead.
Just to ask a follow-up to that, one, obviously, yeah, do you think they have pricing power? Why do you think that? But also, why hasn't Spotify increased the price of their?
No, that's very important, and I'll get to that. So I think first, I was actually a believer of the fact that the big tech companies, they didn't care about music, and sort of were like a loss leader, great way to capture new subscribers and whatnot for their bigger, ecosystems. I was pretty surprised in the past year when we saw Apple, Amazon, and YouTube, the three of them, raise prices, right? So I think I changed my mind a little bit on what I thought was their stance on that. And now I'm a little bit more in the camp that they've realized that they have the pricing power, and that music doesn't necessarily need to be a loss-making business, right? I think it probably helps that we've seen a lot of changes in big tech in the past year or so, and a lot more discipline in costs, et cetera. So that's the first part, right? And as you said, like it wasn't material, right? It was like $1 or so. I think actually YouTube's was pretty high. It may have been like a couple dollars, and which was like 15% or something. But because when you put it in percentage terms, like $1 from 10 to 11, it's still 10%, right? But yeah, so Spotify has tested price increases in various markets, and they have said, as well as the labels have said, that there was basically no impact on churn, and that's also applied to the other music services, right? The reason why there haven't been that much price increases is because it basically comes down to incentives, right? As the current label agreements stand with all the DSPs, every incremental dollar that they raise prices on, the labels are going to get, close to 70% of that, right? So if I'm Spotify, or I'm any DSP, like, why would I raise prices to give most of those economics to somebody else when I'm own the consumer relationship, right? And I've built the platform, and I've tried to keep churn and low and engagement high, et cetera. So there's not really that much incentive for me to raise prices. And if they're still growing, right? So again, I mean, if you have high single digit growth at developed markets, that's also not a bad place to be, right? So I think what we've seen, and we actually, there was a pretty interesting development in Warner Music's earnings call that was like 2 weeks ago. Basically, Warner has a new CEO, which used to be the head of music at YouTube. His name is Robert Kinsel. And it was the first time ever that I heard someone from the big labels talk about there being the need for a change in the label agreements in order to incentivize price increases on the DSP side, right? So his quote literally was, the current wholesale relationship has to change because today it does not incentivize price increases. And what this tells me is that they've realized that with how things are now, they're not going to rush to raise prices. So my theory is that they're going to get better economics on the incremental dollar, therefore incentivizing them to raise prices. And if you think about it, it's going to be a kind of a win-win situation, win-win-win, because the streaming platform is going to get more money at a better margin. The label will still get more money, and the artist will get more money. Obviously, the consumer is the one that quote unquote suffers, but I think part of the thesis for the whole music industry here is that it's the most undervalued form of media content, right? Per hour, I think it costs something like 30% or half of what other comparable forms like video or video games cost. So theoretically, there's a lot more that consumers could be paying for music. Now, where can that go? I mean, I think we'll see. I've seen, and I think, this is like pretty common on Twitter, but you'll see people polling like, what happens? Like, what would you do if I double your Spotify subscription? And you'll get all these, varied results. I think, first of all, like, I wouldn't pay any any sort of attention to that, because polling is inherently bad. Like,
yeah, for example, I one time polled if a podcast had 2 advertisements, would you listen to it? And roughly this poll, and 60% of people said I would stop listening to that show, and there's no data that supports that. So that's
a perfect example, right? So polling is pretty bad. Like, consumers don't know themselves, right? And there's also like so many different ways that like Spotify is not going to double, or any DSP is going to double their price overnight. But if it takes place over 10 years, like I'm pretty sure people wouldn't go anywhere. Now that it's important to talk about churn here as well, because a lot of people also think that these platforms have very high churn. And again, this is there's a lot of nuance to this. Okay. So if you look at these markets where we're talking about where the potential price increases would take place, churn is between 2 to 3%, which is pretty much comparable to Netflix, right? If you look at cohorts of, call it 6 to 12 month cohorts, so consumers that have stayed for longer than that, to adjust for trial periods, in markets like the US and the UK, churn is below 1%. Okay. So that's not like well known. I think Spotify has basically talked about this once in their investor day, and it was like that figure was kind of buried in there. But people still think that these services have like 6-7% churn, right? And that's just not the case. Now, when you look at the whole company, because you have markets like India and some places in Latin America where they offer weekly plans and sort of prepaid plans and things like that, that basically screws the whole formula up, right? Because you're sort of renewing weekly. You can count somebody has churned 4 times, where that's not necessarily what it means. So that's why they stopped reporting churn in the first place. But yeah, so the way to think about it is churn is low, engagement is high, once they stick around and they build playlists and they become accustomed to a certain UX and whatnot, they're not gonna go anywhere, right? I mean, at least we're not anywhere close to a price where they would consider going to an alternative, right? And I do think that if the incentives change, you'll see that even big tech is going to continue raising prices. So it'll just be kind of the tide will rise, and everyone in the industry will benefit.
What other markets do you think are going to be big in terms of growth for streaming? You mentioned India. Is that kind of one of the biggest?
Not yet. I mean, the one that's actually been pretty surprising is China. China is now a top 5 market, and growing fast. For the last 40 years, the top 4 markets have stayed the same. It's the US, UK, Germany, and Japan, I believe. Maybe not in that exact order, but everything else has been sort of meaningless and ignored for a very long time. But with streaming, now that you can actually monetize globally, we're seeing a lot of markets, emerging markets like China, that have been growing a ton. Penetration in China is 10% now, which is pretty high. I think India is like 1%. Again, paid subscription, right? Obviously, things like YouTube is huge in India, right? But I think India is clearly a pretty promising market. Indonesia seems to be doing pretty well as well. LATAM, interestingly, is a market that still has a lot of runway ahead of it, but has also embraced streaming pretty well. I'm not sure exactly what the penetration is over there, but it's I'm pretty sure it's probably higher than China, right? And streaming entered Latin America a couple of years after the US, so they've been at it for longer as well. So yeah, kind of in the medium term, those are probably the markets where most of the growth will be coming from. Some people talk about Africa as well. It's definitely growing fast, but it's also coming off of a really, really low base. So yeah, I mean, 10, 20 years from now, we'll be hearing more about those markets. But I think that the bottom line here is there is so many different places where growth is coming from that's just going to be a pretty good tailwind for the industry generally. Even if obviously ARPU is lower, but it's just the amount of people that are going to end up paying for a subscription service is going to be multiples of what it is today, and that's kind of the most important thing for now.
Right. Yeah. If you get a billion people paying $2.50 a month, that can be meaningful for these businesses, at least those segments within at least some of the big tech companies.
Exactly.
One follow up on China, because I know we don't want to go too long here, but I think people may be interested. Is it like the other internet services around the globe where they've kind of separated themselves out, or do the big labels in Western markets, or I guess maybe Sony's from Japan, but the big 3, do they have relationships with these companies or any streaming services within China? Like, is Apple Music in China? Because I know Spotify, for example, has a deal with Tencent Music where they don't go in that market, but Tencent doesn't go in any other international markets from what I'm aware of. I
think it's a kind of a handshake understanding, but they did exchange equity. They had an equity swap years ago where they each own 8% or something of each other. And that's kind of the understanding. So in China, you basically have Tencent Music and NetEase, which has been growing nicely. Tencent had a quasi monopoly for a couple of years because they actually had exclusive deals with some of the labels, but that got killed by the regulators. So now you have NetEase kind of leveling the competition a little bit. The labels have been trying to get in there inorganically, so by acquisition. I'm not as familiar with that market specifically, but I know that they paid a lot of attention to it, and there's things like like JVs and things like that they've tried to get into, because in China and emerging markets generally, local music is incredibly important, and especially in places like India and things like that. Like they very seldom listen to like the global stars that we all know, right? So it's incredibly important for labels to get some exposure to that. I think we'll talk about the labels more specifically in a little bit, but yeah, that's one sort of issue that they're trying to address, just their exposure to emerging markets, because they don't have as strong a foothold in those markets.
Yeah, let's talk about the labels, because I think most of the discussion has kind of been from the lens of the streamers. On the label side, do you think that, I guess it's kind of a simple question, but do you think the big labels are good businesses? Why or why not?
Yeah, no, I think I do. There's some caveat to that, because when you think about the big labels, and I think it's helpful here to also just put the background in place. There's three big labels that control roughly 70% of the market, and that's Universal Music, Sony, and Warner in that order, right? And when you think of any of those three labels specifically, you're really talking about two businesses, right? One is the back catalog. Okay, so the back catalog is, there's different, people will define it in different ways, but basically anything older than 3 years. And when you think about especially the deep back catalog, so music from the 60s, the 70s, the 80s, and et cetera, where the labels basically own those master rights in perpetuity. I mean, that is still incredibly valuable. Okay, so you're basically talking about a toll road. There's no operating expenses related to that. And I mean, the Beatles, for example, over 30 million listeners on Spotify. They're basically a top 100 artist. UMG owns those masters. And I mean, they're taking in a lot of money from that without any sort of associated expense, if that makes sense. There's some royalty that's probably being paid out to, the probably Paul McCartney probably getting some of that, et cetera. But so that part of the business is very valuable, and it's benefiting a lot from the growth in streaming, right? There is theoretically some decay in terms of how long those artists and how long people will listen to those artists, but I think that they own such a vast, a vast catalog of different artists that they're probably protected enough that if one of them, kind of falls through and people stop listening to them, you'll have something like a Fleetwood Mac event that we saw on TikTok a couple of years ago, where they blew up again and came back to the charts. And there's all these things that they do as well. Like you have the biopic of Queen. Streaming increased meaningfully after that came out. Sometimes they'll do reissues of albums and like mix them again and put them in like really high quality sound and put them back on. They did that with the Beatles recently. I mean, that sells for $200, like if you want to buy the vinyl set, right? So there's all these like low hanging fruit things that they can do to keep that alive. And it's a really good business, and that is pretty much impossible to disrupt, right? You can't replicate that. Now, turning to what the more traditional role of the label, right? So that's known as the frontline catalog, right? So this is what you would think of in terms of what a label does, right? So it's artist development. It's helping them, form their image, putting them in touch with producers and songwriters and musicians to record an album, etc. Like that business is still a good business, but it's not as good as it used to be. And there's a lot of moving pieces to that, right? So the first one is that what we were talking about, the competition, which is kind of it's kind of a double-edged sword, because the fact that there is so much competition means that the labels can also help artists differentiate themselves, right? But that the fact remains that even if you sign to a label, there's no guarantee that you're going to make it. So if an artist wants to, if all they want to do is like be a global superstar, they're most likely gonna sign to a label. So they have that benefit going for them. But at the same time, you have a lot of artists that grow organically by themselves, being independent for a very long time, and sometimes either stay independent, which means they're just competing with the labels, or if they do decide to go to a label, they're going to have a lot of leverage. And that's something that's also changed a lot especially in the last 10 years, right? There's this idea of that we were talking about, of a label offering an 80-20 deal in perpetuity and owning the master. Like that doesn't happen that often anymore. Like, yeah, with newer acts, if you're unproven and whatnot, like the label will force their hand and they'll be able to extract that from you. But I mean, if you have a couple million TikTok followers and a couple 100,000 listeners on Spotify, you can probably sign a pretty decent deal with the labels and actually get your masters back in a couple of years. So yeah, I guess that's kind of one way to explain why I think it's a little bit tougher. But again, it's their businesses are these two businesses put together. So all in all, they still have pretty good runway growth ahead of them, I think, and they're still good businesses.
What are the growth avenues besides streaming? Because we hit on streaming, it's going to most likely grow at maybe 10% or so for the foreseeable future, and that's great for them. But there's more people listen to music in other ways. Is there any really material growth avenues that you think could benefit the labels?
Yeah, so I mean, social is a big one, and people, a lot of people focused on TikTok right now. The labels have been pretty vocal in the fact that TikTok doesn't pay them enough. Facebook, so Meta, has actually been trying to be sort of the good guy in that part of the market, and they've for a long time they've had deals in place with all the labels, and something that's important to differentiate here on the deals with platforms like TikTok and Instagram, for example, is that those deals, as opposed to how the streaming deals are structured, are usually fixed payments, and they're super short. They're like maybe 18 months or something like that, and just keep getting renewed. But it's not consumption based, right? And I think the labels are trying to change that, but it's not it's not that easy. It's kind of a back and forth negotiation in terms of the labels arguing that music is, central to their consumer value proposition, and them coming back and saying we're a discovery tool, like we shouldn't be paying you that much, etc. So it's complex, but I think they can probably manage to do something there, and it's been growing pretty nicely, right? You have other things like fitness with having songs on the Peloton. Like Peloton will pay something to the labels to license that. Video games as well, things like Roblox, etc. So these are some of the avenues that labels are trying to better monetize. AI is becoming another one right now. It's kind of a big question mark in terms of how all of it will play out. But we did see UMG signing a deal with an AI company that does like sleep music, AI generated, and UMG is actually going to work with them. I think we're going to talk a little more about AI later, because that's a whole separate conversation. But that's one of that's some of the ways that they're trying to monetize outside of streaming. And as we know now, that they're very focused when it comes to streaming. They're very focused on those price increases right now, which, I mean, we'll see probably later this year. It's how those agreements play out and what it means for the future of streaming, right?
I guess it sounds like the pie, if you think of the music stream or music industry as a whole, is going to grow. How it's sliced or who gets certain take rates, do you think that will change? In other words, do you think Spotify's maybe margins, but also their take, could increase over time, or do you think it'll stay kind of relatively similar to how it is today?
I think there is a case to be made that now that price increases are very much on the table, Spotify is going to get an effective increase in take rate on that incremental dollar, but the base will probably stay the same, right? So it looks more positive for Spotify now going forward, but I don't think it's going to change drastically, if that makes sense. I do think that the way to think about the industry and the opportunity for all the players that are involved are by what you were just suggesting, which is growing the entire pie. And something we haven't touched on that it's probably worth mentioning and discussing a little bit is the superfan opportunity that labels are also starting to mention more and more, right? So this whole idea that no matter, like, if I'm the biggest Taylor fan ever and you don't like Taylor Swift, we're both paying the exact same thing to listen to her, right? So there's an argument to be made that there's a lot more products and offerings that should be distributed through these music streaming companies that could be offered and people would be willing to pay. I mean, we know that people
like a tip, right? Like a tip jar almost.
Yeah, right? So it could be tip jars. I don't know if tip jars would work, but there's obviously a lot of testing would be taking place around that. But we've seen how much people are spending on like vinyls and things like that, and how much they're paying for concerts. So there's clearly a very, very big demand for monetizing superfans. But you could envision a scenario where Spotify and this is not like specific to Spotify, like this could be offered across all the DSPs, right? But like if someone told me, I don't know, Death Cab for Cutie was offering extra special content for $10, and maybe that's a one-time payment, maybe it's a $5 subscription or whatever, like I would subscribe to that, and I would probably do it for my top 5 artists, right? Or maybe you pay a one-time fee and you listen to the album 3 days before it comes out with the artist in a live or something like that. Like there's a ton of things you could do to play around and just monetize that superfan in a much more effective way. Something that basically the labels were just not really embracing a couple of years ago. We have seen the labels slow. Their growth has slowed down these past couple of quarters, and there's some concern around that, and that's also why they've tried to push more the price increases. But that's not necessarily indicative on what's going on in the broader industry. As we said, they're losing share, especially in emerging markets, which are the fastest growing markets. So, Spotify is still growing pretty nicely, but then the labels, they sort of depend on what releases they have on any quarter. And again, they're losing some share to the independent market as well as emerging market. So it's just different moving forces on the industry.
All right, let's flip back to the streamer side of things. I think what's interesting to talk about is, the big companies. There hasn't really been a big new streamer in the last few years, but who, let's say, over the last 3 to 4 years has made better, let's say, I don't know, gain market share or made better inroads globally or in certain markets. If we look at the big ones like Spotify, Apple, and Amazon. And then I also want to talk about, because I think this can be added into this response, is the nice Twitter comment we got about the multi-format risk, which in my mind, the biggest looming competitive threat to the other streamers would be YouTube and then potentially TikTok as well.
Sure. So I actually think you can count YouTube as someone who's made incredible inroads on the subscription side, right? Because YouTube has always had a huge role in the music industry generally. It's just been monetized via advertising for the most part. But they, Google went through a couple of like mishaps. Originally, they had like Google Music or Google Play or something like that, and YouTube Red, and eventually they figured it out. And now you basically have YouTube Premium, which includes both ad-free YouTube as well as YouTube Music, and that's kind of their most popular product. The last figure they reported was they had about 80 million subscribers, which is pretty incredible, right? I mean, they've definitely taken share. So that's one that is worth sort of keep paying attention to. But I think we're at a point now where the market is pretty much defined, at least, excluding China because of what we talked about. But it's basically Spotify, Apple, Amazon, YouTube, and I mean YouTube can probably overtake one or both of those at some point. And then you have all these other subscale kind of regional players that I think my sense is that it's going to be really hard for those players to remain standalone. We've all seen how tough the business is, right? It's a very low gross margin business, especially compared to all the other tech. So it just naturally requires a lot of scale if you want to eventually have any sort of chance of being profitable, because you need to try to get leverage on anything that's below the cost of goods line. So it's just incredibly hard to do that for someone like a Deezer or even Tidal. I mean, we've seen some of the headlines around Tidal.
SoundCloud. SoundCloud should, I think, would cede share to these other people as well.
Yeah,
Pandora
so
too.
It's tough, right? And Deezer has actually exited a couple of markets. The other really interesting one that makes a lot of headlines is Rezo, which is basically the TikTok music streaming company. There's been reports a number of times that they're going to launch global. We haven't seen anything about that yet. They only operate in 3 countries, as far as I know, and that's India, Indonesia, and Brazil. But interestingly enough, they did announce a couple of weeks ago that they're closing down their ad-supported tier, which was, to me, that says that first, that they're super unprofitable on the ad-supported side, and it just takes a way too much money to subsidize that to get more subscription. But they're probably rethinking their strategy, right? Because I think launching globally is probably incredibly hard, even for a company that is backed by ByteDance. But it feels to me that if we look at this from kind of a capital returns framework, money seems to be exiting the market more than it's entering it. Like, it's basically impossible for someone to start a new streaming company at this point, right? Unless you were someone like YouTube, which obviously had a huge, head start and good competitive advantages in their distribution. But taking, any other player and just coming in from scratch, again, we've seen how hard it's been for ByteDance and with their TikTok distribution, and it just, at least for now, we haven't seen anything that shows that they're gaining a lot of market share.
Okay, maybe last question.
There was another one back there.
Oh, multi-format.
Yeah, no, that's worth quickly touching on. I think, it's important to keep in mind and sort of be cognizant of the different ways that people listen to music, especially Gen Z, because that's what is going to drive most of the growth in the next 10 years or whatever. And if they're spending most of their time on TikTok and they just don't want to be listening to music, and you get some sort of habit change in that sense, I'd be concerned about that. I don't think there is data to support that. Like, I think if you look at just the amount of hours that people are spend listening to audio and consuming TikTok would actually count as, social media, or actually short form video, which counts as video. So it's not being it's not taking share from audio. Like, audio is still incredibly, an incredibly big part of of our consumption per day of any media, and I think it's going to stay that way, right? I think people discover music through TikTok and eventually just go and listen to it at whatever service they're subscribed to, right? That's kind of my base case.
Okay, how about AI? I know this is one where it's hard to have any concrete thoughts here since it's so open-ended, but any thoughts in general on AI and how it might affect, I guess, the industry overall?
Yeah, no, it's definitely a big question mark. I think there's a couple of ways to think about it, and there's also different parts that get affected by AI, if that makes sense. If you look back at history, I think something that is interesting and worth keeping in mind as all of this unfolds is that every time a new piece of technology, came about and changed the way that music was made, the reaction of most people, and especially like the established community and the artists, was typically like, "Oh, that's not real music. Like you're not a real artist, right?" And this happened with like autotune. The first time we heard autotune. I don't know if you guys know the story of T-Pain, but basically he started using autotune as an instrument, and he got everyone like all the artists were like insulting him. I think Kanye got into a big fight with him and whatnot because he was cheating, like and stuff like that. And now obviously like basically everyone uses autotune, right? It's like a standard industry practice, right? Same thing when production became digitized, right? In the 90s, what we were talking about, you had to go to this studio that had probably millions of dollars of equipment, and now you can basically replicate all that in your computer and make, produce a really good sounding song through your computer, right? And that brought about electronic music. And again, a lot of people were saying that's not real music, but then you have artists like Tiesto and Avicii and David Guetta and all that. So my point is that I think the way that this will play out from a creative standpoint is that because everybody's going to have access to it, apparently, I think there's going to be really creative ways to use it, and the best artists will just find a way to differentiate themselves in terms of working in conjunction with AI, if that makes sense. It's not that they're going to press a button and put something out and it's going to blow up and like, no, I think they're going to use it as a tool, right? It's going to be like having another songwriter. It's going to be like having a great bass player next to you. And it's kind of what you can do with that, like your talents combined with the AI tool, the sum of the parts is going to be bigger if that makes sense. Now, the other question, obviously, is the legal aspect, right? And that's where I think there's an even bigger question mark, because the labels are arguing that they're protected and that you shouldn't be training data with their music because it's copyrighted. And then you have, the wow moment for me, at least, and I think for many people, was when all these Drake songs and Weeknd songs started coming out that people were basically using AI, were copying their voice and kind of putting out a song as if it were being performed by Drake, and it sounded exactly like Drake. Now, I think for that specifically, there's a pretty strong argument that you're sort of impersonating him, and there's this legal aspect known as name and likeness that is probably enforceable as well. And those songs got taken down. But I think the labels are probably better off working collaboratively with these platforms and finding a way to sort of license the songs to a lot of these platforms and trying to monetize them in some way. It's probably going to increase competition even more. I'm pretty sure about that. But yeah, I mean, it's definitely, it feels like one of those moments where we might be entering sort of the next phase of music, and I'm sure we'll see a lot of changes. So, a big question mark, remains. I think the DSPs like Spotify are probably more likely to benefit from it than be heard. I mean, it related to all of this, Spotify released their AI DJ. That's basically a large language model that came from their Semantic acquisition. And I mean, if you haven't tried it, I encourage you to, because it's pretty incredible the way that it talks to you and just like plays music for you. It feels like literally like a personalized radio. I'm actually using it a lot in the car because I don't have to think about it. I just press the button and then it comes up. So yeah, I mean, a lot of question marks. I mean, it's definitely I think it's exciting to kind of see where all of this goes, and probably could predict that it'll bring some volatility into some of these companies in the near term, as we've seen, because a lot of these are public now, which is the other sort of interesting thing that's happened in the industry. Like 5 years ago or more, there were no public companies. So I'm glad to see that music is sort of starting to get more and more attention as an industry these days.
Okay, well, I feel like we could go forever on the industry, so we got to call it at some point. But that is going to do it. Thank you, as always, for joining us. And we got to throw a disclosure on this real quick. Want to remind listeners that Brett and I are not financial advisors. Anything we say or discuss here on Chit Chat Money is not formal advice. We're going to I think we have an extra disclosure we'll throw in at the intro for Sleepwell as well. But basically, do your own due diligence. This is not financial advice. Brett and I are actually general partners at Arch Capital, so clients may have positions, and we do have a position in Spotify, and maybe some of the other securities discussed in this podcast. So all that is to say, not financial advice. Thank you all for tuning in. Thank you again, Sleepwell, for joining us on the show, and we'll see you all next time.